Hello and welcome to Personal Finance. I'm Kukuletu Cele. Your salary could be viewed as your most valuable asset. Without it, sustaining yourself or your family would be near impossible. But a salary is not guaranteed, a reality faced by many people who've lost their jobs due to retrenchment or injury. David Kopp, CFP and HOD of Advocacy and Consumer Affairs at the Financial Planning Institute, joins me now for a look at when you should consider income protection or retrenchment cover. Good to have you with us, David, as always. Maybe that's a good starting point. When do you need to consider these decisions? And, it's quite a poignant one and an important discussion for one to have.
I think the important point you made is your salary is probably your most important asset. So we're very quick to rush out and insure our cars because we value our cars more. But what about your earning potential? And I think the simple answer is anybody who is earning an income should look at getting some sort of protection for that income, whether it be due to income disability or retrenchment cover.
Is this regardless of age and where you might be in your career stage?
Yeah, I think it's regardless of age. And in fact, it's more important for young people starting out in their careers to get particularly income disability cover. If you think about it, starting your working career, you've got maybe 40 years ahead of you. What happens if something happens in year one? That's 40 years of income that you will not be able to earn. So probably more important for young individuals to cover their income and make sure that if something was to happen to their earning potential, they would be covered for it until retirement at least.
Tell us about the key differences, salary protection versus retrenchment cover.
Okay, so your income disability cover is exactly what it says. It's if you become disabled either due to injury or illness and you're not able to do your work, then your income disability cover kicks in and starts paying you a monthly income. Retrenchment cover, it's a relatively, I wouldn't say new product, but what it does is it pays you an income for up to 6 months in certain circumstances when you're out of work and are not able to earn due to being retrenched specifically.
And this covers any kind of range with regard to income, whether you're earning 5,000 Rand or 50 grand a month?
Yeah, most of the products I've seen out there sort of cap your limit for retrenchment cover specifically to about 30,000 Rand a month. So anything above that, you sort of got to self-fund. Your income disability, you can insure for up to 75% of your income, barring certain conditions where they could increase the claim payout to 100% of your income.
Tell us about that, because that cap on 75%, it's not the same as insuring your vehicle, where you get the full value of it replaced. Your salary, on the other hand, why are those caps necessary?
So the intention behind disability cover is to help you both in terms of a temporary and a permanent disability. So to start out with, to prevent people either injuring themselves or not taking medical advice to go back to work. If you're sitting at home thinking, I don't really want to go to work today, you might consider cutting off a leg or something because you're going to get income going
That's
forward.
A bit drastic.
It's a bit drastic, but yeah, you've got to be worried. So it's to prevent the fact that it's not meant to be seen as something that pays for the rest of your life if it's not needed. So if you are able to rehabilitate and go back to work, you should be doing everything possible to go back to work. But like I said, in certain circumstances where it's proven that your disability is in fact permanent, they will increase your benefit to 100% of your income.
Does your disability also need to be work-related or impact how you earn your income? I work as a television anchor and as a journalist. I use my voice, my face, my mind. If my big toe for some odd reason is not working or has been amputated, could I not claim on a particular cover?
So it's important to understand your claims definition when you're taking out income disability cover. So some of the definition says if you are unable to do your own work, and others is a own or similar occupation. And then recently, in the last few years, they've also introduced impairment cover. So what that means is that if I am impaired from doing my work in some way, let's say I lose an arm, so I can still go work, I can still do what I'm trained to do, but I can't do it as well, then a percentage of it can be claimed out. So it has evolved. So in the beginning, it said your own or similar occupation. So if you've got that definition, it means that if you can do something else that your training entitles you to do. So as a financial planner, if I lost my ability to speak, I could still maybe write books. along those lines and earn an income that way.
See, you've got a future career ahead of you.
Indeed.
So we've highlighted the issue does certainly lie with the terminology and
Correct,
understanding it quite thoroughly. When it comes to retrenchment, if I decide to leave my job voluntarily or take on a voluntary retrenchment package, would that also impact on my claim?
So as long as it qualifies as a retrenchment, whether it's a voluntary retrenchment or not, your cover should kick in. What's important to note too, and I don't think a lot of people understand it, we all have some form of cover in terms of the unemployment insurance fund. That little deduction that we see off our pay slips every month. That people know it, I think, very well for maternity benefits, but what they don't understand, it also covers you for sickness and for losing your job. Unless you voluntarily walk out. So you can't resign and claim from UIF, but if you are retrenched or you do even get fired, you are able to claim from the unemployment insurance fund. It's not great. I mean, the unemployment insurance fund pays out between 38 and 58% of income, and it's also got a ceiling, a cap, which is about 14,800 Rand that it pays out at. So it's important to make sure that you got cover over and above that.
Once salary gets taxed, does this mean that these particular payments you're referring to for disability and maybe for retrenchment would also fall into a particular tax bracket?
So good news and bad news. Currently, yes. So if you're getting a monthly income disability payment, it is taxable. But on the same token, when you're contributing to that kind of policy, you do get a tax deduction while you're contributing.
Does it offset each other necessarily?
It doesn't offset each other, no. Because your premium is maybe, let's say, 300-400 Rand a month. Okay, your income might be 15,000 Rand a month. So your deduction will be in no ways as big as the income you get. From the 1st of March this year, 1st of March 2015, your income disability will no longer be taxed. So the payout you get on a monthly basis will be a tax-free amount, and that's to align with capital disability. Because at the moment, if I take a lump sum benefit and it pays me out as a lump sum, it's not taxable. And as I say, from the 1st of March 2015, it will be non-taxable from an income disability viewpoint and a retrenchment benefit viewpoint.
And maybe if you can highlight with regard to the installments versus the lump sum payout, I'm sure it works differently again for retrenchment versus disability cover, but let's start with retrenchment. That package, am I getting a lump sum payout to last me for a couple of months, or is it an installment agreement for the next 6 months until I find another job?
So in terms of retrenchment cover, the cover that I've seen out there covers you for a monthly income until you either start working or like I say, a maximum period of 6 months.
So you can't decide to stop working eternally?
No, you can't. You've got to find a job again. I think that's the whole point with retrenchment. You are able to work, it just covers you while you can't find work.
Well, it's that time again where we go to our Practically Speaking segment. David, this is where things get fun, actually, where you're going to give us your suggestions or your advice with regard to particular scenarios in our case study jar. So I'm just going to reach my hand in there. Okay. A little bit difficult today, but the first case study is what reads as such. My company began a retrenchment process last year, and I feel that I might be next in line. What measures can I take? And maybe that's a good question, because if you take retrenchment package in the first 3 months of the year and by July you have been retrenched, are there certain implications with regard to how soon you can claim?
Yeah, so many other products out there actually have a 2-year waiting period, and some of them even say that 1 year must have been with the same employer.
Sure.
So your retrenchment cover you've got to be very careful of. My suggestion with regards to retrenchment and looking at a financial planning viewpoint, if you do suspect that you are going to be retrenched, pick up the phone, get hold of a certified financial planner professional and start making plans. Hopefully you've got a emergency fund that can be used. But remember, with regards to retrenchment too, you do get severance pay. So you've got to plan how you're going to use that. You've got the ability to claim from the UIF. You've also got to look at your debts going towards it and saying, what debts can I afford to pay? What is my budget going to look like if I do get retrenched? And start negotiating with your credit providers and see what leeway they can give you if you are retrenched. But yeah, definitely, if you're worried about it, if you haven't started yet, start making your emergency savings fund now. But again, start planning and like I say, get a CFP professional to help you put that plan in place. What are you going to do with your pension and provident fund? Because on retrenchment, remember, that can also be paid out in cash.
And it gets taxed, does it not?
It does get taxed. So there you get your first 22,500 tax-free. and on withdrawal. On retrenchment, your first 315,000 can be tax-free, but it's not a good idea to take that amount in cash. Firstly, it is going to affect your tax consequences on retirement because it is taxed as a retirement. And secondly, that money is due for your retirement. So if you take it every time you get retrenched, you're not going to have a great retirement.
Exactly.
So rather try and preserve that if at all possible.
David, I'll tell you what, let's do one more particular case study. I'll have to move this closer to me. Doesn't seem like my hand's fitting in the jar today.
Need a bigger jar.
Yeah, we need a bigger jar. This particular case study reads as such. I work as at a desk job and I've lost the use of my leg due to an accident last week. My colleagues say I can claim for my disability cover. Is this true?
So again, it goes down to what your claims definitions say. So if you have got one of the newer generation type products which does cover you for impairment as well as full permanent disability, then yes, you would be able to institute a claim or a part claim. Again, you would be assessed in terms of what income you would actually be losing, and they could cover part of your income loss. From an income protection viewpoint, if you've got a lump sum disability, again, they review it based on an impairment cover. So losing a leg is an impairment because it does affect your quality of life and working forward, and you could get a percentage of your cover paid out due to losing your leg, yes.
Something else that comes to mind is the money element. As South Africans, we are all Scrooges. We like to spend money on the things that we don't need and are very stingy on the elements that are necessary, but we tend to turn a blind eye. How much is too much when it comes to your premiums? Do you monitor this according to what the market average is, or does it relate back to a risk profile?
So again, it will be related to a risk profile. So things like your type of education, your smoking habits, your type of employment that you've got will be taken into account in determining your premium. Obviously, if you work in a high risk environment, such as an airplane pilot.
Or a miner underground.
Or a miner underground, as opposed to someone sitting behind a desk, you've got a different risk profile. So your premium will differ to that. In terms of how much is too much, well, there again, you've got to sit down, make sure that you've got a plan in place, and you understand what your needs would be in the event of you being disabled. So the viewpoint would look at it, if I lost all of my income, would I need to replace all of it, or can I replace some of it? What is my family situation? Would my wife or partner be able to pick up the balance of the income that's lost?
So maybe I'm not too high risk unless one of these cameras actually hits my head.
Correct, yes.
Maybe.
Yeah. We haven't seen the set fall down on this show yet.
Exactly.
It's like some others, so
David, such a pleasure having you in and for clarifying the issues regarding not only retrenchment cover but also disability cover and salary protection. Unfortunately, that's where we have to leave it for personal finance this evening, but a big thank you once more to David Kopp from the Financial Planning Institute. Remember that we want to hear from you, so get in touch and send us your particular scenarios. You can tweet us at CNBC Africa using the hashtag Finance410 or to myself at Kukumfupi. Until next time, bye-bye.